So you diversifying your investments across stocks, bonds, but you're still far away from financial freedom. Now, traditional diversification is smart for managing risk, but it doesn't really help you reach your goals of financial freedom. And in this video, I'm going to make the argument that the answer is a resounding no. Now, if you want to generate cash flow, build wealth faster, and pay less taxes, you're going to have to look at alternative investments, like, for example, real estate. But that doesn't mean you have to manage tenants and toilets either. So in this video, I'm going to show you how you can invest passively in real estate without having to do all of the work. Hey, my name is Michael Blanc, and I help people become financially free with real estate. Let's do this. So financial advisors will tell you, hey, you got to invest stocks and bonds in a well-diversified portfolio. And it may be that you're diversifying risk, and that is true, but how quickly does it actually move you to financial freedom? Right? Your financial advisors also will talk to you about the 4% rule, right? If you want to retire, you can sell up to 4% of your portfolio to live off of. Now, what does that mean? Like if I want, gosh, that's $80,000 per year in pre-tax income that I can sell from my portfolio, I need $2 million, right? But the average savings rate of an Americans by the time they're 65 are like $175,000, right? So the average American is light years away from having $2 million in a stock portfolio, right? So something appears to be broken. And I tried to do this as well early on. And, I looked at life insurance and things of that nature. And I was like, I can't save myself to retirement. Like it takes too long. And maybe I don't even want to wait till I'm 65 years old. Maybe I actually want to enjoy life when I'm older. And I couldn't really figure out how to get there sooner until you look at alternative investments. Right? And so if you look at, studied away how most millionaires become millionaires, they do it by, number one, living below their means. They actually have money that they save, that they invest, obviously. And they do invest in a mix of the stock market, but also real estate. It's not just stocks and bonds, it's real estate. And the real estate is great because your tenants are paying down your mortgage. Now you get cash flow from it, appreciates in value, you get tax benefits. It's like these 4 separate income streams that you don't have with a normal stock and bond portfolio. And that's really cool. And that's why people with money actually use it as a part of their portfolio. Now, maybe you know someone with rentals, or maybe you've done it yourself, or you've done some flips, and it's a lot of hard work, and they're actually not that profitable. It becomes profitable over time as someone gets 3, 4, 5, 10 properties that are starting to get paid off. But it takes a long time regardless, and it's still a lot of work. And so the question, is there another solution? Can you, for example, invest more passively in real estate than having your own rentals? Some people have done these turnkey investments, which are pretty cool, right? So you basically buy a property, let's say in Memphis or some other places, and a company manages for it. They buy the property, they renovate it for you, and then they lease it up, and they manage it for you. And you own the property and you get the cash flow, which is pretty cool until the tenant leaves, or until the property manager flakes out. So I've heard some very mixed feedback from these turnkey investors. It sounds like it's passive until things don't go well, and now you got to hop on a plane and you're managing a property halfway across the country. Now, there's a better solution, and that is really real estate syndication, specifically in the multifamily space. And this is where you, along with other investors, invest passively in a large building. Imagine a 100-plus unit building. These are 10, 20, $30 million buildings. And the benefit of that is that because of the scale, the quality of the property management is much higher. The profitability is higher, and the risk is lower because you're spreading it out over so many different tenants. You don't have a single tenant risk like you do with a single family house as well. And so this is really the way that you can get involved in real estate passively without actually having to manage tenants yourself, and without the risk of one tenant moving out and then not being able to replace it as well. Now, the key with that is just a couple things. One is a little bit of education, like we're trying to do with this video about multifamily syndications in general, but the biggest difference maker is to invest with the right operator, right? A right operator who's got track record buying and managing these properties, someone who's got an in-house team. They have their own asset managers, their investor relations. They're not just raising capital for somebody. And they've been around for a while. They've maybe sold a few properties as well. And we would love to be that trusted partner for you in the multifamily space. And this is why we're putting out so much content. We really feel like an educated investor is a sophisticated investor. And so Well, I just want to encourage you to kind of join our investor club. Go to nighthawkequity.com. Check out all our resources on our blog. Check out our YouTube channel that we have here. We have some free downloads that educates you for real estate syndication. So really follow us on social media and just kind of educate yourself about this amazing asset class called multifamily investing. So hopefully you found that useful. I'll catch you next time.